Okay. Okay, so good evening everyone, no. Um, this is part 3 of the chapter 5. So, pasensya na dahil medyo pangit ang audio sa ako ang last video for the part 1 and part 2 because I was using a Bluetooth nga speaker, headset. Although di jud kayo nindot akong tingog, no, especially kung mag-record, but at the very least I think it's better now. Anyhow, so what you have to check in the notes to financial statement is that all of your figures are actually match the one that are present in your income statement and the other financial statement. For example, in the income statement, as per kaning ako ang advisee, sabi dito, sales in 2022 is 266,476. So, let's check yun sa niya pag-compute. Ayan, 266,476. That's actually correct. And please, 2 decimal places dapat, no? 2023, 316,377. Okay, so basically, that's it, no? Hindi na ako isa-isahon. Just make sure nga parehatanan. Okay, now, after computing for all of those, okay. So, in note 6, utilities expense, ang i-compute lang niya is for the year 2022. You might be asked asa ang for year 2023 and 2024, so please include. Okay? And also, as much as possible, I would also, pwede mo mabutang din rin, no? If mag-increase mo, if you will decide to increase it year by year, for example, year 1, 1,668. Tapos by year 2, 1,834.8. And then in year 3, nahimo siyang 218. So obviously, nag-increase siya, but there are no further explanation as to nganong nag-increase. So, pwede ninyo na siya ibutang, dapat ninyo na siya ibutang sa financial assumptions ninyo. So, let's try to compute, no, kung pila ang iyahang gigamit nga increase. So, that's 10%. So, there is a 10% increase in advertising and promotion. Okay? So if 10% yung magagamit, increase, include it in your financial assumptions. And if nag-increase po ka dire in the other expenses and sales, make sure naka-indicate siya sa financial assumptions. Okay. So, the same. Year 1 lang yung i-compute and there are no other computation for year 2 and year 3. Now, let's go over the break-even analysis. Now, I'm not sure as to kinsay gisundugan ninyo na but of course, for the past 4 or 5 years nga panel and naga-check ko sa mga BP, gapanundog lang dyan, no, mga estudyante without even understanding unsa ni siya nga mga figures. So basically, the break-even analysis is an analysis para makabaluta pila ang dapat quota nato per day, per week, per month, or per year. So the break-even point is the point wherein zero ang profit, zero ang losses. So that's the minimum amount na dapat nato ma-hit on a daily basis para makabayad ta sa atong expenses and dili ta malugi. So any sales nga below sa break-even point, lugi ta na. Any sale above the break-even point, ginansya ta na. So if we just hit the break-even point, then wala tayo profit, wala po tayo loss. Okay? Now, so the formula for break-even is kanina diri sa baba. Total fixed cost divided by the contribution margin. Contribution margin is computed by selling price minus variable cost. So, gikuha sa or gross profit rate. Most of the time, I just use the gross profit rate. But anyhow, compute ang gross profit rate. This is correct. Selling price minus variable. This is not really the gross profit rate, but the contribution margin. Contribution margin ang magawas anong selling price minus variable cost. Okay? And then if you divide siya, selling price pa dyan, that's the contribution margin ratio. So kung mayroon ka gross profit, selling price minus cost, yun na siya. Dili lang variable cost, but the unit cost. Anyhow, sige na lang. So ang gibuhat dere is that the selling price minus the variable cost of 52. So the computation is ganito. 70.6 minus 52.3. Answer 18 divided by 70.6 then times 100. So therefore, the gross profit is 92. Okay, take note 2 decimal places lang. Huwag mo na masyadong habaan. Okay? So, and then, since na tayo gross profit rate or contribution margin ratio, total fixed cost, nakabutang naman siya dire no, naka-indicate na. This is only for year 1, I guess. Year 1, yeah, year 1. So, fixed cost, ayun na, dili na ka, pwede na kadili mag. So, natay duha, no? Natay ginatawag na break-even point in units and break-even point in sales. So, the break-even point per unit is since ang gross margin or ang contribution margin man is 18, so 64.74 divided by 18.3. So, that's 3537.9 or this is your annual. Wala ka naka-indicate, no? But this is supposedly your annual. Dapat nakabutang siya diri. So, annual BEP in units. So, wala na. Dili na ka pwede mag-ano dire. Dapat, ano na lang ni siya. Ayaw sa pag-divide. Okay? So, ang dapat gibuhat ani is or, ano siya, or 3538. So, there's no such thing as a 0.9 units man atong gisgutan diri. Meaning, kung pila ka buok ang imuhang kailangan ibaligya to hit break even. So 3537.9 or 35 not in pesos but in units. Okay? Now, so the 35 karon 3538 since this is your annual, your monthly BEP units gyapon is equals to 3538 divided by 12. So that's 3538 divided by 12. So that's 294.83, 294.83 or 295 units. Then daily BEP units. So I presume na 20 dire, so I would presume nga 20 days mag-operate. So 295 divided by 20. So that's equals to pila? 295 divided by 20. So that's 14.75 or 15 units per day. Okay? So, yan. Now, napod tayong ginatawag nga so basically tulo no, tulo ang imong BEP dire for 2022. Now, the BEP sales, napod tay break-even point in unit, napod tay break-even point in sales. So, may tabuan is fixed cost lang yapon divided by GP rate. Okay? So, 64 divided by yan, point, mali na siya, no? Ano lang, 2 decimal places. So, ayan. So, since 25.92 man to, 25.92, so mo ni siya ang decimal equivalent. Therefore, the break-even point in sales annually, round up na lang na siya, 40. So, this is in pesos. Okay, in sales man siya, pesos. Okay? So, for me, no, it's not necessary na i-compute pa ni siya isa-isa. No need na. Ang ako dere is, pareha lang yapon atong ganina. So, this is your annual annual BEP sales. Annual BEP sales. Then, monthly BEP and sales. So, dali lang. 249.77.40 divided by 12 months. So, that's 20,814.78. Okay? So, sir, wala na yung round up. Wala, ayun na siya round up because that's in pesos man. So, pwede na. Okay? Then, daily BEP sales. So, that's 20,000. 2814.7 divided by 20 days. So that's 1,000. Point 74. 73.9 man. So 4.74. So nga na. Okay. So if you've noticed, kung tanaw na to ang daily nga, di ba ang sales na to, kailangan na to maka 1,040.74. If we divide na to siya by 15 units, so this is more or less the price, no? More or less the price, which is actually true. So, doon lang siya sa 70, estimated man. Kaya mag-match man dyan ng units and sales. Kumbaga, units, i-multiply lang na siya sa price, mugawas ni siya. Or, the other way around, kani siya, nga mga sales, i-divide mo na siya sa selling price, then mugawas ni sila nga mga units. Anyhow, for me, that's it, no? For break-even point in units and then sales. And I think there's no need for the break-even point in sales per item or per product. Okay, kanilang. Personally gani, I don't need depende sa panel, no? But kung ako, as financial analyst, the break-even point for the first year is already enough. No need to compute for the second and the third year. But kamo, depende sa inyo ha, kung pangitaan mo sa inyong panel, then that's it. Okay. Now, let's now go to the contribution margin per unit. Actually, ang gihimo ninyo, giparehan ninyo ang computation sa contribution margin per unit as well as the gross profit rate. Okay? Manang parehara man niya ata. 3864. Dito sa taas ganina. Now, 3864 yapon. 35 itang. Anong dili ni pareha? Weighted. Okay. So daghan kayo, no? Daghan kay computation for the break-even point. So I would stick, you must decide whether you will be using the gross margin or the weighted contribution margin. But then again, for me, it's just the same, no? Because this is just rough estimate. At the very least, naatay idea as to how much we will be targeting in terms of our sales. So again, gamay lang man ni sila ligas. Di man kayo niingon nga material. Or when I say material, dili kayo significant ang difference ani nila. So long as ma-justify ninyo na may computation as to how much is your break even. Okay? So I will not dwell on it much longer. Let's move on to the financial ratios and analysis. First is the return of investment. Okay, the return of investment of the business measures the percentage profit that is generated from this investment. Okay, so it is specifically stated here that the formula is net profit divided by initial capital. I would like to highlight the word initial capital because throughout your entire computation, you should be using the initial capital and not the equity amount. Okay? Year 1, tama ni 25,000. But in year 23, yes, tama po siya, no? 25,000, 25,000. This is actually correct. Kay namanggoy uban grupo nga ang ginabuhat for year 1 is initial capital 25. Tapos pagka year 2023 or then year 2, i-plus na nila tong net profit diri which is mudako na. which is mali na siya, di na siya mao. So in this case, year 2 is 32%, year 1 is 32%, year 2 is 45%, and year 4 is naman eh. Actually, mali din, no? So, the rate, so ang profit ninyo for year 1 is 80,748.8 divided by 25,000 times 100. So, it's not really 0.32 but 322.99. Or you can, or 322.9952. Tama ba? Okay, 299 or let's just say 22, 323, 323 times 100, then we will have the 323%. Okay, so the rate of return for year 1 is actually 323%. Dili siya katong 0.32, mali to siya. Meaning, at the end of the year, ang imuhang capital nag times 3 at least. Mo man nahitabo dira, di ba? Ang capital kag 25. Gikan sa 25 nahimo siyang 80,000. Nagkaginansya kag 80,000. Sa ato pa nag times 3.23 ang imuhang kwarta. Mo nang niabot kag 80. So 323 and not 0.32. So for year 2, so 11,251 divided by 25,000 times 100. Muna. So 4.5 na siya dapat. Tapos 450%. And then for year 3, 159,440.24 divided by 25. That's 6.377 or 78. So wala siya equals gibutang 6.377 6 or times 100. So that's actually 637.76%. So, pwede po ka mag-add rin, no? So, kaya na rin. Total return of, so actually, return on investment ang tawagan na nun, dili siya return of investment. When we talk of return of investment, gibalik lang ang imong investment. But, it's actually return on investment. Okay, so, year, tapos ROI, annual ROI. So 2022, 2023, 2024. On year 1 kay 323%, 2023 450%, and 637.76%. Then add tag isa. Total for a 3-year period nakaginansya taog so 1,410.76%. Meaning, for a 3-year period, nag-times 14, nag-almost times 14 ang imuhang 25,000 nga kwarta. Okay? So, gross profit margin, ato ta diri, no? So, this is the formula, gross margin divided by sales. Okay, so the gross margin is this one divided by the sales. So, 145,492.8 divided 266,476. times 100. Therefore, the gross margin is 54.60. Okay? 0.60. Ako na lang siyang gi-round up. So, 54.60. Gi-round up na lang na ako. Okay? For year 2023, 183, 434.4 divided by 316,377. So, 57.98. And then, for 2024, 237. Again, make sure nga kaning mga figures is the same with that of your financial statement. Di na ako i-check, no, kay pa-check na lang na ako ako ang advice sheet. So, at the very least, kabalo mo yun sa ang process. So, it should be 61.94. Okay, so that's the gross margin. Okay, okay. Adto to sa ratios. Now, the ratio is different from kaning mga margins dire. Okay? Kani siya, dili ni siya in percentage. There's no such thing as times 100. So, when we talk of asset turnover ratio, ang buot pasabot na is using your assets, okay? Using your assets, how efficient are you, no? How efficient are you in using your assets to produce the sales? Okay, so wala na yung 100 dira. So, net asset nimo 266, ang sales nimo, wait lang. Are you sure? Baliktad ba siguro ni? Let's try to ano. So, net assets is for year 1, it's 105 for. Baliktad ni siya, no? Baliktad. Ang sales nimo is wait lang, may double check na ako ang kuan. Double check na to ang asset turnover ratio na formula. Net assets divided by sales ba? So wait lang. So net sales divided by okay, assets, asset turnover. Okay, baliktad ni siya, no? It should be net sales divided by average total assets. Okay? Or the assets na lang, total assets. Pwede na po. So, for 2022, it should be 105.74 since mo na, ay dili, mali. Ang sales na to for year 1 is 26 naman ba ni? 266. 266 divided by 105. So, tama to yung gisulat niya nino, no? Mali lang ang formula. 105. Yan. So, asset turnover, let's see. 266, 476.80 divided by 105, 8.8. So, 25, round up na lang siya. 252 times. Okay, so again, dili siya percentage, it's just that. Ang buot pasabot, using your assets nga 105, you were able to produce 266 na sales. Therefore, you are very effective. Okay, how ka kay kanira man imong asset tapos naka-produce kag 2.52 times. Okay, times na siya. Or just as that, pwede na siya. Diri upod, again, walay 100. So, I would trust, no, nga tama niyang ipangsulat diri So, let's try to check na lang the computation. 301, 37.60 divided by 218, 269.80. So, 45. Again, not percentage, but simply just that. So, walay 100. Okay, wala siya answer. Equals 382,816.89 divided by 3777. Okay, so 1.01. Okay, nagababa ang iyahang asset turnover, meaning as time passes by, dili siya nagiging hindi siya nagiging efficient sa iyahang paggamit sa iyang assets. Kung nag-start siya nga 2.52 yung asset turnover sa year 1, year 2, 1.45 na lang, wala niya na times 2 ang iyahang asset. By year 3, halos wala na na-erog, no? Naga-increase man gud iyang asset, naga-increase iyang cash, pero wala naga-increase ang iyahang, wala kaayo naga-increase ang iyahang sales. Okay, investors owner ratio. Okay, return on equity. Yeah, I think tama ni siya, no? So, return tama ni, tama ni nga percentage ni siya. Percentage. Okay. Try lang natin check kung tama bang computation. 112,521 divided by 2182. 8 times 100. Okay. Return on equity. Percentage yapon ang return on equity. Return on sale. Return on sale. Net profit. Ayan, return on sale. Okay lang ni siya. Return on sale. Paki-check na lang, no? Return on sale. Okay. Okay, then project feasibility na. So, basically that's it, no, for chapter 5. I hope na may natun-an. And if there are questions, feel free to leave a comment sa comment section or ask your financial analyst for some clarifications. Thank you guys and ayong gabi sa tanan.